So this is part of a series that I'm going to be posting over the next few days or so, talking about certain aspects that people are asking about. And whilst a lot of you may know a lot of it already, there'll be a big proportion of people that may not know. So just bear with us here. So today I'm going to talk about literally what is interest, how does it work, what is interest rate itself, and how does Bank of England get involved in it, and lastly, what is inflation and the relationship to interest rates. So let's get cracking. So what is interest? Well, interest is basically when somebody who's got money lends the money out to somebody else who doesn't have it, and the person who lends it charges something called an interest. So it's almost a percentage of the money that I lend you to then do something else with, and that amount, the percentage, is called the interest rate. So it is charged on the person who's borrowing by the person who's lending. Now, everybody's got different thoughts about interest and the need to have it, not have it. This is not the purpose of it. The purpose of this video is talk about, in a capitalist system, there is something called interest. And the interest is basically the difference between, well, the carve out, the amount that the lender charges the borrower, and that appears in banks, loans, credit cards, finance for your car. Whether you like it or not, you are paying interest. If you're not paying interest, you are charging interest. It's one or the other, and the idea is being to be the one who's charging, probably because you have got the capital. If you are borrowing, you don't have the capital, but ultimately you need, especially in our capitalist system, if you're going to grow, you can grow by savings, but it's going to take you a heck of a lot of time. If the average price of a property is £290,000 in March 24, that's going to take a lot of time. And if the average wage in the UK is around 38, call it 40,000 per month, after you strip out everything, you're probably making 2,005. You're going to live and pay your bills and pay your mortgage, so you've probably got £500 of savings if you like to start putting towards buying a property. It's going to take a lot of £500 to get to £300,000. That's why leverage borrowing is a key aspect of the capitalist system of using leverage to buy other things, and that's why interest is involved in it, because when you don't have the money to buy it, somebody else is lending the money to you, whether it's via the bank or directly, and they charge you a percentage, and that percentage is interest rate. So enough about interest rate, and hopefully that gives you a very top line view of what it is. Base rate and Bank of England, how does that work, and why do the banks charge a particular Bank of England base rate? That's for the next video.